Good morning, Paul Georgie from Allendale. It's December 7th, 2010. Outside markets are higher, macro buying in effect here this morning again. Dollar right now is down 35. Crude oil up 130 as we speak, and the gold up over $14 as we speak. We also have stock indexes higher here this morning, and some of that is coming from the announcement yesterday afternoon that Washington has agreed on a continuation of the Bush tax credits, the payment of unemployment benefits for another 13 months. That all has helped commodities and inflation and improvement in attitude, what have you, all across the commodity complex here. We also have news out of Europe. Some economic news there in Germany, positive to the euro, which is supporting the euro and causing some pressure on the dollar. So that is having a positive effect on commodities as well here this morning. Other news, corn, Russia may import up to 3 million metric tons of feed grain. That's providing some support here this morning. China only sells 6% of their corn that they offered in auction this week, at least giving us some ideas that they are starting to control that inflation. We've got South Korea that is reduced their tariffs of corn, soybeans, wheat, import tariffs, so that should allow some more potential for exports of feed grain, especially corn, into South Korea. We do have the USDA report on Friday morning. Attitude there is that we'll see reduced ending stocks in corn, wheat, and soybeans, mainly because of the change in demand. Normally on this report, the USDA does not lower or change production. They usually change the demand side of the equation if they make any changes at all. And with the increase in demand and export business that we've seen, and export sales that we've seen here early in the marketing year, we expect that the demand side should increase, therefore reducing ending stocks, which in turn puts the stocks to usage ratios at very tight numbers. In the soybean, for instance, it could be the tightest number that we've seen since 1953 at about 4%. So some strong numbers there. And in the wheat market, we've got Australia. Their resource of agriculture and economic sciences department says that they are looking for wheat production in Australia to increase. However, the quality is the problem, which could mean better wheat exports here in the U.S. because we've got a better quality wheat than they've got because of all the rain that they've had. So mixed news here this morning as far as news stories go. Overall positive after the sell-off that we've seen yesterday, led by the wheat market, led by outside markets here today. In the cattle complex, we had cutout values higher yesterday, up 115. Select down 5 cents. Markets overnight have broken through the highs, recent highs, making new contract highs here. The April contract hit the 110 level here just a few minutes ago in the overnight trade. Beef supplies on a total demand basis are suggesting that we could have the tightest supplies of beef that we've had in over 10 years. So, and that basically is because of lack of imports. Our total production here in the U.S. is still strong, but because of reduced imports, makes for a tighter beef supply and hopefully better demand here in the U.S. The economic news is supporting the demand side of the equation, giving those traders out in the deferred contracts an incentive to buy. Pork complex steady to a little higher in the futures. Cutout values were up just slightly. And hog weights continue to be a problem. Hog supplies are greater than a year ago. We're running the last 10 weeks higher than a year ago, when the previous 10 weeks to that we were as much as 2 to 3% lower. So hopefully we're running to the end of these heavy supply of hogs, and expect to see some firmness there in the future. So a lot of things going on this morning. If you got any questions, give us a call. We'd certainly be happy to try to answer those for you. You can reach us at 800-262-7538, or check us out here on the web. Look for the Allendale Research Center, and don't forget to sign up for the conference. That's coming closer than you think. We're only 40 days away. So we look and hope that you have a very successful trading day. We'll talk to you tomorrow morning. Thank you.